This video discusses the two most popular paths into Portugal's Golden Visa program: fund investments and cultural donations. The choice between them comes down to a fundamental question of whether you want to attempt to preserve capital over a 6 to 10 year time span or make a one-time, non-refundable contribution. To be eligible for Portugal's Golden Visa program, investors can subscribe to private funds in Portugal. These funds are generally divided into two main categories: closed end and open end. A closed end fund has a fixed lifespan, typically 6 to 10 years, and its investments are in illiquid assets. An open end fund has an indefinite lifespan and invests in more liquid assets like public equity and public bonds. For a full breakdown of the differences between these two fund types, see my video on open-end versus closed-end Golden Visa funds. The minimum qualifying investment in a fund is €500,000. These funds put your money to work with the objective of generating growth. The funds invest in a wide array of assets, including equity in startups and scale-ups, farmland, solar projects, classic cars, cattle, boutique hotels, and crypto. At the end of the fund's life, the goal is to sell these assets, the fund's exit, and return your initial capital, along with any potential gains, your investment redemption. Another popular route for qualifying for the Golden Visa program is making a donation to an approved cultural project. These projects are specific and have limited spaces. If a theater is being renovated, for example, it's not, "We're renovating this theater and raising €3 million." Instead, it's, "We're accepting 5 donations of €250,000 each to refurbish all of the seating in this historic theater." Then, perhaps weeks or months later, it's, "We're accepting 10 donors of €250,000 each to fund the restoration of the frescoes on the walls of this historic theater," and so on. Everything is incremental, focused, limited, specific, and time-bound. Nevertheless, the donation projects sell out quickly and are not well advertised. If this is your area of interest, I can help you to find them. The minimum cash outlay of a cultural donation is half the fund option at €250,000, and it can be reduced to €200,000 for rare projects in low-density areas. This is a true donation, so it's a full loss of funds. It's also not tax deductible in the US, as the donation is made directly overseas. You will not get your money back or make any gains, but it does provide a direct and potentially simpler path to Golden Visa eligibility. This is a critical distinction, as the fund route, despite its potential for returns, carries different levels of risk. The cultural donation, while a non-refundable contribution, has no tax complications, no regulatory concerns, offers a level of simplicity that some investors find attractive. As a client once told me, "If I'm meant to risk $500,000 in a fund that is high risk and that I don't feel particularly good about, I'd rather just spend half of that now to support the arts and know that it's gone to a good cause and I'm on my way." Your mileage may vary, of course. The donation is a full loss of capital, which is a major financial risk. It must be weighed carefully. For more on the risks inherent in offshore investing, see my video on 7 interconnected risks of Golden Visa investing. Ultimately, the choice between these two paths depends on your personal financial goals. Are you looking to make a strategic investment that has the potential to grow? Are you looking to move some assets out of US dollar and into euro, and you want a relatively safe place to park that capital that comes with a side benefit? Or are you looking for the most straightforward, lowest cost entry point into the program, even if it means a full loss of capital? All of these choices exist, and the choice is yours. I'll link to some helpful videos on the costs and risks of these options in the video description. For a full education on these topics and more, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.